I've put together a video of some of my favorite clips about Ripple, XRP, and the future of digital assets. I hope you enjoy.
I think Gary Gensler has continued to kind of go with a narrative that crypto is the Wild West. It's not the Wild West. Are there bad actors? Yes, there's bad actors in all parts of...
Well, bad actors in money laundering in U.S. dollars.
Right. I found it fascinating from reading the documents for all the stuff they said about how bad it was that you did an unregistered securities. They never say anything bad about your platform.
And the fact that the SEC has won almost 130 cases, not true. They settled 130 cases. And they're confusing and disjointed. And we saw the most recent example of that in the Torres decision in XRP, the Ripple case last week. That's why we need to act in this Congress, to bring clarity. And we are not gutting of the SEC. We're enhancing the SEC. We're directing the SEC in a bright line way what their mission is.
So literally, the invariant checker looks at the view, sees if it creates XRP or violates any of the other invariants that we don't want violated. And if it does, the transaction is the results of the transaction are replaced with a notation that the transaction violated system invariance. And that notation goes in the ledger. So if we ever did have a transaction that created XRP, you would actually see an entry in the ledger that said, hey, this transaction caused the system to violate the system's rules, and so we threw its results away. And so instead of there being more XRP, there would be a permanent embarrassing notation in the XRP ledger's history that there was a bug. And you could recreate that transaction, you could replay it, you could fix the bug, and you would never have caused any corruption to the public ledger state. That could have prevented the DAO attack. It doesn't prevent every attack. It couldn't have prevented the parity wallet attack, but it can prevent any attack where you can make a list of the things that you don't want to happen, and those tend to be the worst things. Like someone creating more Bitcoin is one of the worst, worst things that could happen. You can easily identify that and fix it in an invariant checker.
The only two things that, the only two digital assets in the United States that are clear, there's clarity, they're not a security, is XRP and Bitcoin. And the SEC has continued to kind of, I think, muddy the waters around lots of other things. So creating that confusion, I think, actually has helped the SEC try to retain power, because one of the things I tweeted out a while ago is the idea that confusion masquerades as power. If it's clear the SEC doesn't have authority because these aren't securities, they're the Securities Exchange Commission. So I'm super pleased about it. I think it is creating some momentum in the legislature of the United States to create that clarity. But as you know, Adrian, really well, and I think, well, certainly a lot of your customers and prospects know, outside the United States, there's been much more clarity, and that has allowed Ripple to grow. 88% of our hiring in Q3 was outside the United States, in places like London and Switzerland and Singapore and Dubai. And that's largely because there has been that clarity. So I'm really pleased about the case. I'm really pleased that we won on everything that matters. Now, you know better than anyone, and certainly the Medico team, which really just achieved an immense amount of success with a pretty small, lean team and competed very effectively against larger, better funded companies. But the macro environment around custody digital assets is expected to be close to $10 trillion by the year 2030. And inevitably, people are going to need a place to store those assets, and safe, secure, and they're going to need to be able to transfer them as well, having good on and off ramps, even a tokenization engine, some of the work Ripple is doing around central bank digital currencies or CBDCs. So we think there's a lot of pieces that come together, and we already had, and I remember when you and I first spoke, I remember being on a call with one of the largest top 10 banks in the world, and a bank Ripple was already working with, and they were asking us about, could we help them with their custody? This is prior to the Medico acquisition, and we weren't in a position to do that. And so when we think about that synergy, the ability to say to that existing Ripple customer, hey, here's a best in class, going head to head, time and time again, and winning on the custody level, to be able to bring that product to them, I think is a great opportunity for the two companies together. So, I'm really happy about it. I'm curious, if I could turn the tables for a moment. What has been your experience about the synergies as you've been, you've only been here a few months as inside Ripple, but I'm curious what you have seen so far.
Yeah, sure. I'm going to be very honest here. I think we've been very good at one thing at Metaco, which was focus. We've specialized in doing infrastructure, in building security-related software, and we've done it very well. And we've also specialized in our go-to-market into the larger segment of the banking sector. But it was also our weakness, in a sense, because we became so specialized that it became hard for us to emerge beyond infrastructure, if you wish. So we were probably the best at infrastructure, but then getting into the use cases, starting to think, I'm gonna be processing payments, I'm gonna be tokenizing real assets, I'm gonna create value that the banks can truly leverage in and of themselves. What was becoming harder and harder because our team and our go-to-market was specialized on infrastructure. And I think what we're seeing in the collaboration with Ripple is that we are starting to be able to combine this deep expertise in infrastructure and security that Metaco has acquired, also the network and the success we have on the market with now value-added services, which potentially can leverage also the different licenses that you have as a regulated financial institution, and start selling more vertical offerings that go beyond the pure infrastructure level. So I think that's probably what excites me the most, is that Metaco in itself still exists as it used to be. It's still largely independent, still has its same exact offering with its same ambitions, but it's now able to provide more value to the clients.
Can I do this in a minute? Only time will tell. Hi, I'm Rosie Rios, and this is Crypto in a Minute. So, the way I think about blockchain, it's a decentralized ledger. So how it records your transactions could be anything from NFTs to real estate to art. And there are so many more applications that we don't even know are out there. So, as a great example, my son just started his own startup company, which is this crowdfunding portal for real estate on the blockchain. And when he explained it to me how it works, it really just opens up your eyes about all the other use cases that could be out there. And so when you have that type of kind of sophisticated technology, think about how the world of technology has changed even in the last few years, right? Whether it's virtual reality, augmented reality, and now applied augmented reality in the metaverse. So I think that the prospects are out there. I just think it's so exciting to think about how this next generation even uses the blockchain and thinks about commerce, and I think there's just so much more to come. I did that in 59 seconds, just an FYI.
One interesting data point here, which I think not that many Americans know, or I'm sure the XRP fans know, but just like how big XRP is in overseas markets, right? Korea and Japan, there's just huge communities there. And so I guess my question for you is, has Ripple run into any legal problems in any country outside of the United States? Or is it really just the US that you're dealing with this question? Because, XRP is all over the world.
It is just the US. There's only one country in the world, and in fact, there's only one regulator in one country in the world that has ever suggested that XRP should be registered as a security, and that's the SEC in the United States of America. No other country has taken that position. In fact, other countries have affirmatively taken the opposite position. We have over 800 employees at Ripple. They are dispersed throughout the world, not only in the US, but in Singapore, in London, in Ireland, in Brazil, in Dubai. In all of those jurisdictions, we work very closely with regulatory agencies, getting appropriate licenses, getting appropriate regulatory oversight over our business, which, as you know, is to facilitate cross-border payments for financial institutions and banks. So our customers are enterprise, not retail. And what those regulators are concerned with are consumer protection, protecting the integrity of the market, and doing our best to keep bad actors out of this industry. And they're creating regulatory frameworks where those important goals can be accomplished without crushing the innovation and technology that underlies the industry. Unfortunately, in the US, this regulator under this leadership, and actually under the prior leadership, is hell-bent on destroying this crypto economy. So what's going to happen? And we're seeing it. And over the past 2.5 years, We've been forced to grow our business outside of the U.S. and our most successful 2 years in our 10-year history as a company has come in the last 2 years. And all of that growth has come outside of the U.S. And I think others are starting to learn their lesson. And we're starting to see this technology, this innovation, this entrepreneurial, the entrepreneurs that back it, tax dollars, jobs, all of that is going to leave the U.S. And I think, we need to wake up, because it's 2023, and 10 or 15 years from now, we're going to probably see the bring the crypto back to the U.S. Act, like we've just seen with the CHIPS Act. We're losing an incredible opportunity here. The U.S. is a leader, and we're not only, I don't think we're losing our leadership position, I think we've lost our leadership position.
What it means is that someone has signed up to use our technology to enable cross-border payment flows. I think what the confusion that happens in the marketplace is that our core product, kind of our flagship product, is called XCurrent. And XCurrent is solving really the messaging and settlement problem that exists in the financial system today. Humorously, frankly, I point out to people that if the three of us decided we needed to get $10,000 or 10,000 pounds to London today, the fastest way for us to do that is to go buy a ticket, EWR or JFK, and fly it there. And that's just a fact. Obviously, that seems crazy in a world of the internet. I can stream video from the space station. So what that XCurrent is enabling is real-time messaging, real-time settlement between banks. The confusion that I think people are like, well, wait a minute, how's XRP fit? XRP is used in our second product called XRapid. XRapid is solving a liquidity problem. So it's the messaging is, I have an existing pool of capital between the Bank of Andy and the Bank of Dan. You're using big bank, very successful bank.
Bank of Dan is a good one.
Bank of Dan. Andy's bank, a lot of compliance issues.
Oh.
These two banks are using XCurrent to settle fiat. A key point here. What happens, though, is you decide you want to settle with the Bank of Brad. The Bank of Brad is in Argentina, and we're using pesos. You don't want to pre-fund pesos in my bank. Now, part of that is because that requires an outlay in capital, that's dormant capital. Part of that is because you now have a compliance check that you're doing annually and quarterly. There's cost associated with that. And if it's the Argentinian peso, you have an inflation problem. So you put $100,000 worth of, or you have probably $100 million worth of US dollars there that is now going to be worth less over time. What XRapid allows you to do is to have real-time liquidity. The Bank of Andy can sell $1, buy XRP. That XRP can then be moved to an Argentinian digital asset exchange. You can sell the XRP and buy an Argentinian peso, and now you have good liquid funds in less than 10 seconds in another market.
Now, I want to make sure that we define our terms for everyone in terms of XRP, the token of XRapid, Ripple, the company. I think there's some confusion there. Very often when we hear financial institutions talk about blockchain, they talk about using blockchain, but without any cryptocurrency. Cryptocurrency is sort of, I don't want to have to deal with that, but I like blockchain. And so in this example you've just brought up, in fact, let's say the Bank of Andy says, okay, I like the idea of the international payment going faster, less friction, but I don't really know about XRP. I don't want to use that. Can that be, that's a back-end settlement token, really?
That is how we engage customers. Clearly there's a lot of misunderstanding about digital assets. And I think some of it's been, clarified in the panels today. What is interesting, and a quick anecdote, even before Andy and I had met, I was a CEO of a voice over IP company. I was a telco guy way, way, way back when, pre-Yahoo. And actually I came into Yahoo. Yahoo bought a company called Dialpad. I sat down with the CEO, at the time he was a very senior guy at SBC Communications. His name's Randall Stevenson. He's now the CEO of AT&T. Mm-hmm. Randall Stevenson said to me in 2000, AT&T, was the time SBC, will never use IP for voice traffic. Now, his point was, look, we have a robust analog switch network that works for voice brilliantly. We'll invest in data. We'll invest in IP data. We'll have a separate network for that, and that's how it evolved. Well, today, there is no voice network at AT&T. It's all IP. I think the exact same thing is going to happen in the banking world. I talk to senior banks, people who are close to the company Ripple, they're invested in us, and they're like, hey, look, we love what you're doing around XCurrent. Not sure yet about XRapid. That's fine. It's Randall Stevenson. Like, I'm having an echo chamber. the XRapid product gives you a faster product at a lower price. Do we really not think that people are going to say, huh, that's kind of interesting? So over time, I view this absolutely as a crawl, walk, run.
David, as one of the original architects of the XRP ledger, what are the biggest changes that you've seen in the last year?
Oh, it would definitely have to be the increase in decentralization, becoming more decentralized than either Bitcoin or Ethereum. The number of validators operated by Ripple on the Ripple recommended UNL has dropped to a very small percentage. And so the network now is operationally decentralized in a way that those other cryptocurrencies just aren't.
David, how does Bitcoin or Ethereum differ from XRP?
The biggest difference between Bitcoin and Ethereum and the XRP ledger is proof of work versus consensus. Bitcoin and Ethereum use proof of work, which hasn't delivered on its promise of decentralization the way consensus has. They also have much, much higher latency. So a Bitcoin transaction, you're looking at between 10 minutes to an hour to become confident that the transaction will succeed versus on the order of 5 seconds with the XRP ledger.
Last question then. 2019, what are you looking forward to on the XRP ledger?
I'd like to see more use of the decentralized exchange. We have this proliferation of digital assets. We might have a proliferation of stablecoins as well. The XRP ledger has been operating as a decentralized exchange since 2012, and I'd like to see that continue and grow.
As was just said, my name is Ross Leko. I'm Deputy General Counsel of the IMF. And I should explain, I think as some of you know, that the IMF is an international organization based in Washington, D.C., whose membership consists of the governments of 189 different countries, almost every country in the world. And our mandate is to promote the stability and effective operation of the international monetary system and the global financial system. And I think for this reason, our interest in fintech should be fairly obvious.
Well, as was introduced, my name is Brad Garlinghouse. I have the good fortune of being the CEO at Ripple. For those of you not familiar with Ripple, Ripple sells a set of technologies to banks and other financial institutions that dramatically accelerate the ability for banks and regulated financial institutions to settle transactions between each other. We have a series of products ranging from fiat to fiat transactions, also transactions leveraging digital assets. Native to our tech stack is a digital asset called XRP that we allow banks to eliminate the need for pre-funding. I should point out that from our point of view, the challenge that many different markets, certainly true in ASEAN as well, is how do we take transactions that today might take a wire transaction from Singapore to Bangkok, days to settle, and the expense would be quite high. How do we reduce the friction as measured by speed and time and transparency and dramatically improve that? By doing that, we think we can dramatically change a lot of different factors, some of which we will talk about today. This is a market where the ASEAN countries have over 100 billion, almost $130 billion of inbound remittances. And so when you have that type of volume of remittances, and that remittances, as many people in this audience know, are often the most expensive taxed through the costs and friction of cross-border payments today. And so it's a market that's ripe for adoption to take advantage of blockchain technologies, certainly Ripple's technology, and driving those costs dramatically lower. The third dynamic that's actually interesting to see unfold here in the ASEAN markets is, in some ways, the current kind of SWIFT-enabled correspondent banking is leaving some of the ASEAN markets behind. As banks have contracted their correspondent banking relationships, some markets, whether it's Laos, Cambodia, Myanmar, have actually seen their correspondent banking relationships contract, which is a problem for these economies in these markets. And so it's made this ASEAN market, I think, a ripe market for adoption of blockchain technologies and digital assets. Ripple now sees 50% of all of our global customers here in the Asian markets. And so it's been a very ripe, a ripe group for us. Our Singapore office has grown dramatically, about 200% in the last year, and we see that continue to grow through the course of next year. Back over to you, Ross. So, as the regulatory expert, what are the characteristics of ASEAN that you think will either propel this region forward in regards to blockchain or stifle its path?
Really hard question. First of all, I have to say that, when you discuss legal and regulatory frameworks around blockchain or fintech globally, not just here in the ASEAN countries, we're at a very early stage of the conversation, and a lot more work needs to be done. And I think it's also important to note that when you talk about the ASEAN countries, you're talking about a very diverse group of countries at different levels of development, different circumstances, and with different needs. And against that background, it's not surprising that some are perhaps further ahead than others in thinking through policy in the area of blockchain and fintech. And it's not surprising that some of them have taken different regulatory approaches. You mentioned crypto assets, where some countries have put in place regulatory frameworks, whereas others have banned them. But against that background, I think a few important points can be made. The first is, I think there's a general openness amongst many countries in the region to embrace the potential of fintech and think about policy that will allow innovation to happen. Secondly, I think there's a general willingness amongst many of these countries to engage with the private sector, to understand the technologies and the business products and services they're developing, but also to help the private sector understand the regulatory concerns that they raise. I think it's been said that fintech firms in this region are perhaps more willing than their counterparts in other jurisdictions to engage with regulators at a relatively early stage of product development. But I think the most useful example of this process consists of the regulatory sandboxes that countries in the region have put in place, including Singapore, Malaysia, Thailand, and Indonesia. These basically serve two purposes. They first allow new products and services to be tested in a controlled environment, but they also enable regulators to understand the new products and services in ways that will inform regulation in future. I think another important feature, if you will, or point that can be made is that in cases where countries have seen potential use cases that will actually help the population and the financial system, they've been willing to put in place regulation to enable those use cases to go ahead. A good example of this is the cross-border remittance market, with the use of crypto assets as a rail to transfer currency across borders, where this obviously is a very important issue in this region. You have countries like the Philippines and Thailand putting in place regulation around crypto exchanges that address regulatory concerns, including money laundering and terrorist financing concerns, that allow this use case to develop. Thailand, I know, has also put in place guidance around blockchain technologies more generally. And I think these are important developments. But, drilling down on a use case, Brad, I think I mentioned remittances. But, from your perspective, what do you see as a really good use case for blockchain in this region? And how can technology address problems?
So this is what I'll call a softball. For those of you who know, when I think about use cases for crypto, certainly Ripple has focused almost exclusively on a cross-border payments problem because it is where we see a very high degree of pain from customers, whether that's measured by how long it takes, how much it costs, or remarkably, and some of you may have had this experience, how little transparency you have into the state of a transaction. I think that what's going to happen in many parts of the blockchain space is you have immense amount of just pure experimentation. It isn't real. They're not solving a real problem for real customers. I've been fond of saying that experiments are not a business model, or certainly not a sustainable business model. Ripple has decided, instead of going very horizontal and talk about lots of different use cases for blockchain, we've gone very deep in solving this cross-border payments problem. As I mentioned earlier, well, I didn't say how many, but we have, well over 100 customers worldwide, about 50% of which are here in Asia. One bank that I'll highlight that has been certainly aggressive and progressive in their approach is Siam Commercial Bank in Thailand. And the work they've done is really setting them up to be a next generation hub in solving, as some in the correspondent banking community retract from some parts of the Southeast Asian market, Siam Commercial is actually solving that and using blockchain and even using digital assets to help solve that problem. So I think that while the speed and the dynamics that are solved from the transparency of a much better messaging system are profound, more importantly, I think, is how liquidity, and today, as many in the fintech community know, banks pre-fund accounts. There's almost $10 trillion parked as pre-funded accounts around the world such that banks can then debit and credit and make those cross-border flows work. we have a product that allows banks and allows financial institutions, payment providers to not pre-fund, thus making that trillions of dollars more active. And we think by doing this, we really do accelerate the global engine of commerce in a way that is good for corporate, is also good for consumers at the remittance level. And I think truly one of the things we think about at Ripple is some of the populations that are most kind of penalized by the dynamics of remittance costs are those that can least afford it. So when I look at what's going on in ASEAN, I think we have seen, and certainly here in Singapore, we've seen leadership. And I think we're going to continue to see that over the coming 12 months because this is a market where there is more clarity from a regulatory point of view, as Ross was articulating. And so I think that allows companies like Ripple to continue to invest and expand the footprint across this region. Let me touch briefly, I do think it's useful to step back sometimes. And I think we get so caught up in the craziness of the crypto markets and we lose sight of big picture. What problem are we really trying to solve at a macro level? And for Ripple, that always comes back to a common 3 words as a refrain. And it's really about enabling an internet of value. I moved to Silicon Valley 21 years ago in the earliest days of the internet that we all enjoy today. And the internet as we know it today was really about data interoperability. I can access any piece of data for anywhere in the world, whether it's a piece of information, whether it's a number. That data interoperability has really catalyzed lots of positive momentum for the global commerce and even in global society. When we talk about money interoperability or value interoperability, that doesn't exist today. And if we can make value networks interoperable in the same way data networks are interoperable, I think there's a lot of secondary and tertiary impacts that are hard to predict, but could get very exciting. So in the same way that 21 years ago, I don't think we could have predicted that you could take out your mobile phone and click on your Grab app and have a car waiting for you outside in seconds or minutes or fast. It's hard to predict exactly how some of the dynamics of dramatically improving the speed and dramatically lowering the cost of payments is going to have in terms of, changing society. One of the things I'll comment on is, there's close to 2 to 3 billion people who are either unbanked or largely underbanked in the global financial society. These are people who, if we can bring them into that community, they have great benefits to that. And there's a reason banks don't serve the underbanked community because they don't want to. They don't serve them because they can't do it profitably. Banks are profit-seeking engines. If they can serve a customer profitably, they will do so. And so I think blockchain technologies have the opportunity by reducing friction and reducing costs dramatically to totally change the nature of how payments flow. I'll give you one quick example, which is kind of crazy, I admit, is a lot of us don't think about, here in Singapore, I believe you get paid once a month. In the United States, you get paid once every 2 weeks. Has everybody thought about why you get paid once a month or once every 2 weeks? It comes down to the friction of payments. And if we can remove the friction of payments, why can't you get paid every day? Or even more crazily, why don't you get paid every hour or every second? You can have a stream of value showing up in your whatever repository of value. Now, why you need to get paid every second, I'm not sure. But I do think there's a lot of dynamics that have been built around getting paid every 2 weeks or getting paid every month. And as we remove the friction of payments and make that dramatically easier, I think you're going to see secondary and tertiary effects that are very difficult to predict, just like we couldn't have predicted Grab 20 years ago.
Have a currency exchange sort of built into the protocol so that you can hold your local balances in dollars. And then if I want to send, say, yen to someone else, I can look out in the network, and their protocol enables market makers as well as individuals to make bids for different currencies to exchange them. And so if I want to send yen to someone, I can see exactly how many yen I'm going to get for my dollar at the moment I ask the transaction to occur. So it'll simultaneously clear a sequence of transactions. So say I have a local financial institution that's holding my dollars, and that financial institution is plugged into the Ripple network. If I want to send someone yen, there'll be a transaction from my dollars to someone else who my financial institution has chosen to trust, who's a market maker between dollars and XRP, the native currency. Then there may be another market maker who will make a transaction between XRP and yen, and that market maker, you would look for one who is trusted by the institution of the person who wants to receive your yen. Okay, so there's not just yen on the system, but there's yen associated with particular institutions, and the institutions can choose who to trust. And as a consumer, I can confirm all 3 of those transactions simultaneously, so I don't have to suffer any exchange rate risk. There's still bid-ask spreads that are set by the market makers, but there's no risk. I know exactly how many yen will go. And so again, you might ask, well, what's the role of the XRP, this native digital currency in the middle? It's just a central node that connects everyone else. It connects the yen to market makers, to the dollar market makers. So you have fewer hops to get from one thing to another, and that XRP hop is sort of risk-free. And so what that's going to do is it's also going to encourage people to hold their local currency. And even though, as I mentioned, some of the initial interest in Bitcoin came from people who didn't want to hold their local currency. They had, fears about central governments doing hyperinflation, which, in the United States is less justified. Obviously, there's some countries where that is a legitimate fear, but there were people who just, for whatever reasons, didn't want to hold their local currency. Those people wanted to hold Bitcoin. But most consumers actually would be better off holding their local currency. Their local currency is what they get paid in, it's what they buy things in, and they really don't want to be subject to extra exchange rate risk. And so one of the things that the Ripple protocol does is it really encourages people to go ahead and hold their local currency or whatever other currency they want. They only use the digital currency as a rail, as a way to get from point A to point B. So in the Bitcoin world, you can do that by putting together an exchange with a transaction, and potentially a third party could create something similar. So with Ripple, it's built into the protocol. And I think what's kind of interesting, though, about the Ripple protocol is it really highlights that it's not about holding the currency.
This is another place where tribalism is not helpful to us. Right. And so if we can work together, Algorand just mentioned that they're going to work on this, we're going to work on this, and
we're going to make sure we start to talk about whether we can collaborate as well. So it's good.
Oh, wow. Yeah, fantastic. Possibly. That's and we're going to talk about how we can collaborate with the things you were talking about for scam identification and dealing with it. I think that we can work together in a lot of ways as an industry.
Well, I think it's, you have incumbents, the banks, commercial banks, and you have the disruptors. And clearly the disruptors are having an impact on the incumbents.
There is a need, whether it's a Libra or something else, to democratize the exchange of foreign currencies. Today, with computers and electronic market,
there shouldn't be that.
It should be 10 basis points, 5 basis points. It's not percent. And so I actually believe the idea around Libra, I don't think we need to create a new currency, but the technology to instantaneous calibrate all the currencies, that should be done.
Who gets squished by that? Who are the middlemen who are making money on that?
The banks.
We're making, as the Bitcoiners would say, that's progress.
And you've sort of shifted the focus to on-demand liquidity and these cross-border transactions and facilitating faster, more efficient payments. Can they get a grip with that, perhaps more than the rest of it? Because I think for me, that's something that, particularly from my view, is they get and understand.
Yeah, that is absolutely the case. And even, in Davos, to be able to start to talk about that and put numbers on it. Last week, we did $54 million of XRP flows into Mexico. That's 7.5% of all flow from US dollar to Mexican peso.
You were 7% of the market.
Last week. And that's up from maybe 3% in December. So this is growing very quickly. And these are huge industries that can be made massively more efficient by using these new technologies. But I think it goes back to what we said earlier, you have to focus on a real problem, a real customer, and drive that utility. Well, with 7.5% of liquidity into Mexico being driven through XRP, you start to really see, okay, this is not a science experiment. There's still a lot of people, I think, in the blockchain industry who aren't familiar with the fact of how much momentum we have here. You had Alex Holmes, the CEO of MoneyGram, on. Yeah, I think that's an example where it's one of our customers using XRP, and it's working.
I mean, he said, look, I was pushing him to see what proportion of the market you could become of the daily volume. And he was like, look, you need a buyer, you need a seller here. So we're only limited in a sense by the number of people that are simply using the platform and are available here. How quickly do you think, given that you're saying you've gone from 3% to 7% in just a couple of months, how quickly can you scale up? Because it's a tipping point of bringing more people onto the platform as well as anything else.
Well, the great thing is, and this is true in the markets and here at the NYSE, liquidity begets liquidity.
Yes.
The more activity you see and the more people see, it frankly is great. Even the CEO of Bitso, the largest digital asset exchange in Mexico, has been out publicly talking about some of the dynamics he's seen. And instead of being dependent upon the speculative trading of crypto as his business, he now can say, look, institutional flows represent, last week, just one customer through Ripple was $54 million. That's fabulous for him. On a run rate, that's $2.5 billion flowing through what we call on-demand liquidity, or ODL. That's a big deal for his business. And that brings other players that want to say, well, wait a minute, that's good. I want to be a part of that.
Make the case for XRP. What is its benefit and purpose?
Well, I would say there's kind of two aspects to that. So one of them is like, what is Ripple doing with XRP? And the other one is like, what is everybody else in the world doing with XRP? From Ripple's point of view, XRP has the properties to be a sort of intermediary or settlement asset because it's fast, it is cheap, and it's cheap to move. So what I mean by a settlement asset is when you pulled out that 50-pound note, and we pointed out like you can't move the 50-pound note to Mars in 50 milliseconds. XRP you can move around the world in just a couple of seconds. It's much faster than Bitcoin or Ethereum.
You would need a very fast rocket ship to get there in that time.
So one example of a use case that Qualix is using right now is remittances between the United States and Mexico. So rather than having to move that money the conventional way, which takes several days and is very expensive, they just buy XRP at the moment they need it, and a few seconds later they sell that XRP for Mexican pesos. So what you have is you have a remittance pipeline that sources the liquidity on demand, and you're not exposed to the volatility of cryptocurrencies because XRP is so fast you hold it for a minute or two. That's less volatility than the peso over 2 or 3 days. And it's 40 to 60% cheaper. So we're pursuing those kind of intermediate, like if we're going to have hundreds of thousands of assets, we can't have millions of asset pairs with deep liquidity. Like you can't take any one of those 100,000 assets and have lots of liquidity to every single other one of those 100,000 assets. There's just too many of them. So our strategy is to position XRP as sort of the intermediary asset, the sort of the liquidity source. As far as what other people are doing, the XRP ledger has very low fees, very high throughput, and very high speeds. And it also has a decentralized exchange built in, so it can host other assets. So other people are experimenting with things like micropayments use cases, like eliminating advertisements where you pay for content instead, those kinds of things.
Do you want to talk a little bit about just the evolution from a payments company to where it is now? I mean, you kind of closed that answer with, we're thinking payments is still our core, but you want to talk a little bit about how that journey has gone from an international payments company?
Yeah, so I mean, there's $130 trillion like cross-border payments market, and the existing system. So we initially just said, let's go to these institutions and let's talk to them about using a cryptocurrency. Like our very first, the way we kind of got into that is like, let's talk to them about using a cryptocurrency. We weren't thinking about like our thought of disrupting the industry was to get them to use cryptocurrency for settlement. We thought, hey, that makes and it still does. Like that's still you'll hear people saying, Bitcoin could be a great means of international settlement, and they're right. And so we talked to these institutions and we said, hey, like how about using a digital asset for settlement? And what we ran into was technology that's 40 years old throughout the system or worse. Like, you log into your bank's website or they have an app and it's all glitzy and nice. Everything looks fantastic. You drag things around and it's all nice. And then you go 1 or 2 layers down and it's like you got into a time machine, right? And you wake up, if you're lucky, in the 70s. We have settlement based on old reel-to-reel machines where they couldn't settle in real time because if the reel that had your transaction was on the bank system, it couldn't be on the system that communicated to like other banks, because that was a physically separate machine that someone had to carry a reel of tape from. So they said, like, there's no way, like, for example, they said, well, like, when we make a payment, we don't even know the path the money's going to take. We don't know how much the fees are going to be. So there's just no way that we could settle at that time because we don't know how much we need to settle for. And we're like, ugh. We face palmed and we said, okay, I guess we have to rebuild like the plumbing. We have to rebuild the lowest layer. And I have to say, that is still an inspiring idea to me. Like, one of the things that I found so inspiring about Bitcoin was this idea that don't build on the incumbent systems and the existing systems that are legacy and decades old and that enrich other people who are heavily invested in them. Like, use the technologies from the bottom up that are the most suited to the problem, that are modern, that are, like, for example, like, most of the existing payments infrastructure is based on cryptography that predates public key cryptography. Like the thing that secures everything on the internet, the thing that like enables you to not have to worry. Like I can access Amazon and know I'm talking Amazon without having to have without having to have a password that Amazon and I share. Like the whole security infrastructure didn't exist in the payment system. And so they said, like, there's no way we can settle with the cryptocurrency with the software we have. Like, you're gonna have to Swift. It's not like Swift is making a whole bunch of money, right? Swift is basically almost like a money neutral thing. It's not like we wanted to take over this lucrative business. We just needed things to work better in order for us to like get people to use a cryptocurrency for payment. And so we built this system, RippleNet. And we looked at all the problems there. We brought the failure rate down. We brought the settlement time down. Even, it's crazy, but end-to-end messaging prior to a payment is revolutionary. which is it's ridiculous. Like you go to a bank and you tell them you want to make an international payment. You tell them, how much is this going to cost me? Oh, we don't know. How much money is going to be delivered? Oh, we don't know, because there's no messaging, right? The money is just sort of pushed down a pipe and eventually something will come out the other side. And a significant fraction of payments that don't fail, still the customer calls to check on the payment because they don't know, because they'll tell you it takes 3 to 6 business days. So when do you call them? I mean, it's just, so we kind of wound up having to fix like the whole payments infrastructure. And I think we built RippleNet, which is a genuinely like better payment technology. We have the XRP ledger, which I think is a genuinely better payment technology. And, you know, there's this saying, like, if you build a better mousetrap, the world will beat a path to your door. Well, we got 2 better mousetraps, you know, where payments are still awful. So I think, you know, we have the technology to allow every financial institution on the planet to settle with every other financial institution in a compatible jurisdiction in any asset in seconds for less than a penny. Just think about this. Anyone who's made a payment knows that we're nowhere near that today. But imagine every financial institution settling with every other financial institution in seconds for less than a penny, any asset. That's fundamentally transformative. We have the technology to do it. Now we just need to figure out how to drive the adoption. And of course, there's all the challenges with, there's incumbents, there's regulation, there's inertia, you know, there's the there's big players who are really trying to defend, you know, if you're one of the largest banks in the world, you want to push pause or stop on technology, because you're in the lead. So of course, like, you know, you say you love technology, but obviously, you know, you wish you could stop it. So, you know, all of those challenges.
What Ripple has done, both with our proprietary software and with the XRP ledger, which is a blockchain, using its digital asset XRP, which is crypto asset like Bitcoin or like Ethereum.
So ISO 20022 is a global standard for financial information exchange. This enables interoperability between different systems, straight through processing of payments, and rich data transfer. And it'll also foster competition because it's open and flexible.
Well, look, I think the SEC, what we found through their emails and during this litigation is that they even identified that there is a gap. And we saw that in the emails they were exchanging internally. So I think there is a gap. But look, like any industry, you know, you're going to potentially have bad actors. But the vast majority of people I interact with that are builders and using these technologies to build a better infrastructure for financial transactions, for real estate. There are a lot of different use cases for blockchain and crypto that really can be profound. Ripple has been focused on cross-border payments as a starting point. But look, I think you're going to see an incredible number of use cases for these technologies, and having clear rules of the road allows for the investment, allows entrepreneurs to lean in. I think the SEC just has been wrong as a matter of law, and it has really stifled the innovation here in the United States.
I just wanted to ask the panel one last question. There was the great phrase that when Bitcoin tanks, don't sell in panic, let me get out first. I was wondering what the estimate of the panel in 5 years' time, what is going to be the price of Bitcoin? Reza, could I ask?
Well, I mean, it's going to be much, much higher than now because the next generation is going to accept it as a means of payment and store value. The challenge is whether we're able to create safety around those transactions, in that, are we able to limit people that are nefarious from using it? And I think Ripple and others will solve for that. KYC, AML, OFAC.
My advice would be, don't worry about where digital assets are going. Invest in picks and shovels. So Levi's, which produce jeans, people who were producing picks and shovels, you can't go wrong with that because the industry will become 50, 100 times bigger. And the infrastructure will always win, irrespective of which digital asset wins.
Chris Cannon, our head of engineering at the time, said, "What is Ripple?" And you should have seen Brad's face, but that's like a great question to ask somebody inside an organization. Like, what do you think? Why do you think we're all here? You know, what do you think the purpose of the I love that question. So Ripple, so it's always hard to figure out where to start that answer, because there's so many ways that you can sort of approach it. But I'll start by saying, like, Ripple is a company that evolved out of the original development of the XRP ledger. It was created by the same people who had originally created the XRP ledger. And the original task was to do something with all the XRP, essentially, to come up with some way to turn that into something, something useful and valuable. Today, Ripple is focused on essentially primarily, I think we're a payments company. We really want to make payments work better. We look at things like remittances and enterprise payments, and they don't work for a lot of people. So the analogy that I use is like, if you've ever sent an email and made an international payment, the two experiences could not be more different. But there's no technical reason why international payments can't be as simple as email. There's just a lot of stuff that needs to be built and developed and gotten out there. And so that's like sort of the core problem that Ripple has been working on. Today, Ripple has internally like two components of like accomplishing that strategic goal. One of them is RippleNet, which is an enterprise payments platform. It's made for institutional payments, and it enables them to settle with a cryptocurrency because it's a modern payment system. It has other advantages too, but like in traditional payment systems like SWIFT, the way that institutional payments are typically made, the money is just sort of pushed out onto the network, and you sort of hope it gets to the destination. If it doesn't, you solve that. Like email doesn't work that way. Email has closed loop messaging, it has error reporting, like all of the things that payments don't have. And then the other side of Ripple we call Ripple X, and that's the side that's building new technologies for the XRP ledger. That's the side that's kind of bringing institutions and Web3 and NFTs together, building open source software and participating in a greater community to build for the XRP ledger.
Now, the implications for Ripple, you had mentioned that perhaps the company would leave the US, like you're based in San Francisco right now. How realistic a scenario is that in the aftermath of this ruling?
Well, we already have our second largest office today is London. We have a large office in Singapore. We have offices in Sao Paulo, Mumbai. So I view, it's a very global business to begin with. I mentioned earlier, 95% of our customers are non-US. And that certainly has continued to be the case during the lawsuit here in the US. So I don't think it's going to change our business much depending upon how it plays out. We have had, almost growing 10x year on year in terms of volumes across what we call RippleNet. And that's in the middle of the lawsuit. So I do think about this a lot in the context of what does it mean for the US crypto industry? How do we think about blockchain growing and thriving here domestically? And I think as a US citizen, I care. And I think it's important for us to be competitive to have that clarity. Well, we are in a very strong position. We have a very strong balance sheet. I think we've publicly shared we have about $1 billion of cash on the balance sheet. And so we certainly look at these cycles that the crypto markets have gone through as opportunities. This is really the third downturn crypto winter that I have been around Ripple for, and each time Ripple has kind of emerged stronger. And so we look at it as an opportunity to continue to grow and make sure we're solving customer problems, make sure the customers who are already dependent upon us can depend upon us for more things potentially. So we'll continue to look at opportunities, and some of the assets we see around are priced differently today than they were 6 months ago.
Right, and so we are in the midst of this crypto winter. We've seen a lot of layoffs with other crypto firms. Where do you see us headed from here? Like it's definitely been a tighter time horizon in terms of coming out of these bearish moments for the market. Do you think that we're looking at emerging from this in the next 6 months, or do we have a while to go?
Look, I tweeted publicly, you never want to see the industry go through this, and the layoffs are painful. I think it does let people step back and really focus on building. People talk about it as crypto winter. It's like, well, it's crypto building time. It's the season to actually make sure you're solving a problem. In Q2, when a lot of these companies were doing layoffs, Ripple added over 100 new positions. We hired over 100 people in Q2. So it's very hard to predict, when these gyrations come and go. And I give the counsel internally at Ripple of take the long view. And Ripple's always taken that long view of let's make sure we're solving a customer problem. Let's make sure we're delivering utility using these technologies. And the reason why we use XRP is because it is the most efficient for payments. It is extremely fast, extremely low cost, and it works really, really well for a cross-border payment solution.
Of that particular family of notes, we're working on the future generation of currency. So that is my other job.
So I think we're going to see that type of revolution with real-world asset tokenization and democratizing access to things like real estate and loans and all kinds of investments built into the XRP ledger. So I'm hoping that we're going to see, as real-world asset tokenization projects grow, I think the XRP ledger is going to be a really good platform for them to launch on. Particularly because of the low fees and because of the integration with the DEX, with the proximity to sort of the movement of funds. The ability, if someone's going to buy What do you want to do with a real world tokenized asset? You want to buy it, you want to sell it, you want to hold it, you want to transfer it. And if you want to buy it and sell it, you want to be able to do that with whatever asset is convenient for you. You don't want to tie, if you tokenize some sort of debt, like you don't want to tie it to US dollars, because then that limits access to it to people who have sort of proximity to US dollars. One of the things the XRP ledger is good for is giving you sort of proximity to many different assets, and that exchange is seamlessly built in. So I think that's one of the many reasons why the XRP ledger is going to be a good place to launch tokenized real world assets. I think we'll see that in the next year and a half.
A lot of our work is, as I'm sure you'd appreciate, is confidential, but some of the projects we're doing are in the public realm. One of which is particularly applicable to today's topic, and that is our work in cloud.
We're doing a lot with ODL today, and also pushing into RippleNet as well in the coming weeks and months.
I think one of the things that has served Ripple incredibly well is, I think, in contrast to some in the community that are kind of taking a very horizontal view, we're talking about literally over 100 use cases. We've been very specific about one. Right. Payments, particularly cross-border payments. And let's go deep in really understanding that product set, that need, that customer, how you sell into that customer. And so I think, as I look at where we are today relative to a year ago, I think that focus and really understanding that segment and that customer and being able to go deep and really solving that problem has served us incredibly well. And it will remain focused on payments. It's obviously a massive industry. The problems we're solving can be measured in the trillions of dollars. That isn't to say that I don't think there's other great blockchain use cases, and eventually maybe Ripple will address some others. But today, I kind of view it as the earliest days of Amazon, where Amazon said, hey, we're a bookseller. I mean, the first name of Amazon was not Amazon, it was Amazon Books. And they built a platform to serve a need to sell books. And then they did another vertical and another vertical and another vertical, and then obviously productized the platform. I think the best way to build platform technologies isn't by trying to be that horizontal, because by the time you build the platform, the needs have changed and evolved. If you build it really successfully for one vertical, in this case a really big one, you can put yourself in a really good position to build it up for others as well. Back to being a mission-driven company. Look, I will admit I'm a capitalist and I want to build a business, but it's awesome to be at a company where I feel like we can put our dent in the universe. As Ripple achieves success, you can start to see tangibly how that could have, ripple effects.
Well done.
Bear with me. As to how that can impact society in grander ways.
I want the middle to do the absolute minimum necessary for me to get my job done. I want to do it the same way yesterday as it does it today and is going to do it tomorrow. I want that dumb, stable middle. And I don't want it to do a lot. I want it to be very minimal so I can innovate. And that's where Interledger comes in. Interledger is that dumb, stable middle for money and value. It doesn't care what it rides on top of. Is the value on a blockchain? Is it in a bank? It doesn't care. And it doesn't care why you're moving the money or how you're moving the money. Are you paying for data? Are you paying for a product or service? Is it part of some bigger payment? Doesn't care. Just a protocol for moving money and connecting payment systems. And ILP is perfect for micropayments. And this is kind of the other point that I want to make. I think micropayments are going to destroy payments. And this is a radical, everybody says to me, well, what good is a micropayment? What are micropayments for? You know what? What good is a packet of data? If we lived back in the day when we had circuit switching, none of you guys remember this, but it used to be when you pick up your phone and make a call, there was a reserved circuit for you. There was a circuit that existed in the system, and you could have a whole conversation over that circuit. You can have a conversation over a circuit. What can you do with a packet? You can't have a conversation over a packet. Packets suck, right? No. The dumb middle, packets you can control. You can use for anything. Micropayments are like the packets of money. You can connect them into larger payments. There were over 1 billion ILP payments in 2018. The average payment was some microscopic amount of money. But you can do anything with those microscopic amounts of money because payments can stream. And if you think about most of the problems with payments, micropayments solve them. So here's one problem with payment. I want to deliver 1,000 euros to someone. I need an exchange rate. I need to know how many dollars to send. Well, if they commit, if I go to someone and they say, we guarantee we'll deliver 1,000 euros if you give us this number of dollars, they have a risk that I'll wait to see how the exchange rate moves, and I'll only take their offer if the exchange rate moves against them. So one of three things have to happen, and they all have to suck. They all suck.
They could build in a safety factor. They could say, we're going to give you a crappy rate because you might be trying to screw us. You're probably not, but you might be. Well, I'm probably not going to want to take their crappy rate then. And then I'll wind up looking like I'm screwing them. And so now we get this cycle of failure where they don't give me a good offer because they're afraid I'm only going to take it if the market moves. And then it's such a bad offer, I am only going to take it if the market moves. I validate their thesis. That doesn't work. I could pay them for the quote. I could say, look, to protect you, I'm going to give you $1 for this quote. And then you are absorbing the cost. The problem with that is, what if I want to get 10 quotes and compare them? I pay $10 to 10 different people, and like that kind of is awful too. Well, what if they say to me, look, it'll probably be about this rate, might be better, might be worse. How do I compare 10 of those? Like, you have an incentive to lowball me and give me a better rate so that I'll take it with you. And then what if instead I sent 1,000th of a penny through each of 10 providers and saw which one delivered more money out the other end? Now, I continue to send money to the other guys because they might improve their pricing, but I'm sending most of my money through the guy who's giving me the best price. And if the price is really good, I send money really fast. And if the price is really bad, I kind of slow down and wait for the prices to get better. That solves all of those problems. You know, how many times do you check a website that you've entered it correctly before you push enter? Like, if you get the wrong website, hey, you go screwed up, go to another one. How many times do you check a payment destination before you make it? Right? Because it's an all or nothing thing. But if it wasn't all or nothing, a lot of those problems go away. So what I'm trying to tell you is that my prediction for the direction is micropayments are going to destroy payments the way packet data destroyed every other kind of data. The cost of a payment is going to go to zero. And that's going to make possible new use cases that we can't imagine.
You're talking about trillions and trillions of dollars that are flowing across border in a system that was really designed and built 50 years ago. I'm sure you personally have had the experience of moving money cross borders, and it's slow and it's expensive. And we can and will enable much more efficient and much cheaper solutions. What we have seen is in the United States, despite being a U.S. company, is that there's an uneven playing field. We have taken steps as a U.S. government to advantage Bitcoin, to advantage Ether. And the reality is those are technologies that are today, because of the mining concentration, the pools of mining capacity, over 60, 70% of that mining capacity is in China. And so we've advantaged those technologies. So here in the U.S., what we simply have sought is a level playing field so we can compete, kind of on that level playing field and compete effectively. I think you'd see, a lot more adoption from U.S. players of these technologies if there were that certainty. And as an objection to sale, you would avoid that going forward.
I would agree that adoption of digital assets has been a little slower, you could see it as being incredibly quick or incredibly slow, depending on what time frame you think is reasonable. I would say revolutionizing international finance is not something that you would expect to happen overnight. But it is a multi-step process. And I think the first problem that we encountered, we kind of thought that we could take a direct line to settling with a digital asset. And I think a lot of people thought that, well, now we have digital assets, let's just use them for payments and that'll be that. Part of the problem is that the payment systems are just not capable of supporting instantaneous settlement. So if you think about a payment system like SWIFT, where you just kind of push a payment message out and you don't necessarily know the entire path and you don't know the fees until later, you don't even know if the destination account even exists until sometime later when the payment is actually processed by the destination institution. There's no way that you could build instantaneous settlement into a system like that. So we kind of found ourselves in this situation where if we wanted institutions to settle their international payments with a digital asset, we first had to rebuild the payment messaging, sort of the plumbing. And we discovered something interesting on the way. What we discovered was that the existing plumbing was so bad, it dates back to batch computing days, that just improving that messaging was a product. That was something that banks and non-bank financial institutions would be interested in. And so we focused on building a top-notch payment network that can settle with a digital asset. And I think it's fair to say that we haven't yet proven that we can actually settle with a digital asset. We're just making that transition from building a payment network that can settle with a digital asset to figuring out where you really want to settle with a digital asset and making that settlement happen.
At its core, I usually describe Ripple as an enterprise software company selling solutions to financial institutions, banks, payment providers. Part of that technology is a blockchain-based solution. We use a digital asset called XRP to facilitate liquidity. We have a series of products we sell into that market, and we've been fortunate. I think We've focused very clearly on one vertical, payments, and particularly cross-border payments. I think from that focus, we have been able to generate a lot of traction. We have over 100 banks that we're working with around the world, and we're excited about how it's going.
And what about the XRP? Because you've often said it's integral to the plan. Banks are going to use it. Western Union is going to use it. And yet, there's been some reports that this stuff it's the third most valuable cryptocurrency out there, but is there really a real world use for it?
So one of the things I will start by saying, I think it's really important to understand the distinction between what Ripple is as a company and XRP is as an open source decentralized technology. And I think a lot of people conflate those. In fact, people have accused us of intentionally conflating them, and then we'll call them and say, no, please correct your story to separate. They're like, no, people don't understand the difference. Like, no, let's be clear. Ripple is different than XRP. We use XRP we build tech solutions on top of it. The primary product that we use today is called XRapid. And the way banks work today, if you're the bank of Jeff and I'm the bank of Brad, if we have a bilateral relationship and I've pre-funded dollars and I have, let's say, pesos, then we can settle using a product we have called XCurrent, and that's fiat to fiat. If we don't have that relationship, either I have to spend months to set that up, and then I have the capital costs of having dormant capital parked there. I've got the compliance costs of monitoring. Is the bank of Jeff a legitimate, ongoing, trusted bank? Certainly it is.
Always.
Or you can fund real-time liquidity. And what that looks like, and we've talked a lot about our results from XRapid. We've tried to be very transparent about its early days. We certainly acknowledge that we're on kind of mile 1 of a 26-mile race, but we also think we're really the only people that have passed the starting line. Like, we have real production use of our products, and we're seeing real savings from the customers that have used XRapid.
Let's drill down on it a bit. Who exactly is going to use it? So it seems big banks, like a bank, Chase wants to deal with a bank in London to move pounds and dollars around. No need for XRapid. You're talking about the more sort of far-flung places where they might not have a correspondent bank or they don't hold a local currency, so they're going to use this stuff instead?
Yeah.
So give me a specific example of who's going to use it.
So one of the things we've always said is I don't think banks will be the first customers. We've talked about payment providers, and so we have run pilots out there with the MoneyGrams, Western Unions, Mercury FX, Qualix, a couple of others, and those are payment providers that have massive treasury operations. Using one random example, you have a payment provider that has hundreds of millions of dollars of negative working capital because they've taken their dollars or their pesos and they've pre-funded and they've pre-funded the account, so they go into Mexico. Once a week, let's say, they'll wire $10 million to Mexico and then debit along the way. Now, sometimes they overfund, sometimes they underfund. The ability to have real-time liquidity is transformational. The global pre-funded, what are called Nostra-Vostra relationships, it represents something on the order of magnitude $10 trillion. If we can make that more efficient and more useful, we can actually accelerate the engine of commerce kind of on a global basis. Ripple, from its earliest days, has talked about how do we enable an internet of value, and really enabling payments to move the way information moves today. And I think that's pretty dramatic. So drilling in, we've seen pilots with, I think, 6 different payment providers. I have publicly said we expect this year for at least one bank to use XRP in their payment flows, to use XRapid.
Are you sticking to that this year?
100%.
Okay.
And the reason is, just to boil that down a little bit, it's faster, it's cheaper, and so a little bit like, why wouldn't someone use it? And to your point, I don't think JP Morgan Chase, they're one of the largest liquidity providers on the planet. Citibank's one of the largest liquidity providers on the planet. So do I think, for a dollar yen, dollar euro, no. But, look, if you go talk to a lot of banks around the world, they're paying Citibank for liquidity. They're paying JPM for liquidity. And if they can then use a product like XRapid to fund real-time liquidity into, let's say, the Philippines, into Brazil, that's a big shift for them in a very positive way.
So you're talking about a bridge currency that maybe local market makers will use. Okay, maybe we buy that. Here's the other thing, though. The price of XRP this year has ranged from 50 cents to $4. Isn't the whole purpose of a bridge currency you need something stable? How do you account for the volatility?
That is, I think, I'll start by saying there's a lot of misinformation in the market. And I think, as I'm sure we'll talk about as we're up here, I think in some ways you have these kind of holy wars playing out. One of them is this idea that, hey, these things will never solve payments problems at scale because of the volatility. Let's think about that for a minute. So I can enable an XRP transaction in 3 seconds, and so I have to take the volatility risk of XRP for 3 seconds. Or I can use fiat and use a wire transfer, and I'll say through SWIFT, and that usually is about 3 days. 3 days is 270,000 seconds. So it's almost 100,000 seconds, 100,000 times longer than an XRP transaction. The way you calculate volatility is volatility times time. So if you reduce the time by a dramatic amount, even if the volatility is a lot higher, you actually have less volatility risk through an XRP transaction than you do a fiat transaction with SWIFT. Now, the other thing I'll point out is, people will say, well, couldn't XRapid use Bitcoin? And the answer actually is it could. And we've even thought about, architecting the product. There may be circumstances where we would use that because of liquidity. But a Bitcoin transaction today, on average, takes about 45 minutes in, 45 minutes out. So you're talking about an hour and a half of volatility risk as opposed to 3 seconds.
This is pretty tough to pack, the kind of information that I want into 1 minute. I'm David Schwartz, CTO at Ripple, and this is Crypto in a Minute. I've got 1 minute, okay. Well, the first consensus model was proof of work. I guess the advantage of proof of work was at the time it was the only game in town, and it allowed for a decentralized system, that is one that doesn't rely on a central authority. Later developments included things like Federated Byzantine Agreement, with the XRP ledger uses, and proof of stake. Some of the advantages of these later developments are lower cost. Proof of work costs millions of dollars to pay the miners for the energy that they use. Proof of stake doesn't have that cost and can provide comparable security. And if you're the person who's paying those costs, if you're the people who are using the system, how much it costs just to keep the system secure is like a tax. It's residual friction that the system doesn't remove. Federated Byzantine Agreement, which is what the XRP ledger uses, makes the users of the system the stakeholders rather than the people who have the most money to spend on tokens or power. And that provides a more sort of democratic system where the costs can be low and the performance can be high.
When it comes down to your profitability, because you're facing issues with regulators in the US, we've seen really thin trading volumes, very low liquidity in the space. How does that affect your profitability as a business?
Look, there's no question when crypto is going through its boom cycles that's a better thing for the whole industry. But Ripple I've been in the company 8.5 years, and every time we've gone through what are often called crypto winters, Ripple has grown. We're in a very strong position with a very strong balance sheet. As you mentioned earlier, we closed one acquisition earlier in the year. We have another pending acquisition right now. We're continuing to play offense in a whole bunch of different ways, and we're growing the business. We're growing our customers. We're growing our product suite. We believe that our customers are coming to us really seeking for us to be the infrastructure provider around blockchain and crypto technologies. And we started with payments. Now we're in custody. We'll continue to expand beyond that.
What are you most excited about? And what does the marketplace need to be educated about for that to happen?
Yeah, so at Ripple, the thing that brought me here 7 years ago, and I've stayed at the company, is this Internet of Value visions. The idea that you can move value of any type seamlessly around the world and very cheaply, in the same way you can send an email to anyone in the world and not really having a second thought about how much it costs or how long it's taking.
Well, I have a couple of reactions. One is, in some ways, she's in good company. There's others like Warren Buffett and Charlie Munger who've made derogatory comments. But not that long ago, Jamie Dimon, someone who said they thought Bitcoin was, I think, a fraud, and has subsequently come around and realized that, in my judgment, this is an industry that is not going away. It's valued today at about $1.2, $1.3 trillion. But I do think, and I've spoken to Christine Lagarde personally, and I think we need to stop measuring it just by what's going on with the overall value and how are these assets being used to solve real world problems. And I think time and time again, we're seeing more and more real use cases solving real scaled problems where blockchain technologies can reduce friction measured by cost and speed in a way that I think improves the overall economy.
Does the fact that these 19,000 cryptocurrencies have been largely used as speculative assets do damage to the underlying case that you're arguing for?
I think absolutely yes. And it's frustrating. I said when there were about 2,000, so as you said correctly, there's about 19,000 today. When there were about 2,000, I got some heat from the crypto market by saying that something like 99% of them I thought would go to zero. And that wasn't a popular statement suggesting that only 20 would be around. Well, now you have 19,000. You know, my prediction, at least for now, has been moved the wrong direction. But, you know, there are some tokens out there that I think are focused on solving a problem. And those are ones that I can see being used in the future. And we could give a number of different examples. Some of them are present here in Davos. But there's also ones that I look at, I hear the description, and I don't get it. And I think there is risk, as Christine Lagarde commented. They are speculative, they are risky, but that doesn't mean there isn't real opportunity.
Brad, I find this conversation refreshing. We've spoken to so many crypto experts out there who know nothing about this and who just want the gamification of it. They just want to encourage people into various Ponzi schemes. I hear what you're saying. We're great fans of what blockchain technology can do, but just to categorically say, you think most of these products are just going to disappear and investors are going to lose their money over the coming years?
I think there's a high risk that, well, certainly when you say most, meaning more than 50%, I think there's a high risk that most of this fails.
Now, how many fiat currencies in the world are there? About 180?
Look, there is clearly examples where these can be used. What Ripple is doing with our digital asset that we use in our technology stack called XRP is solving a cross-border payments problem. And that cross-border payments problem we all have experienced. When you're moving money cross borders, it is slow and it is typically expensive. There's no reason we can't use these technologies to solve that problem.
I hear you. And do you know what? I think more regulation, better, then we can all know what we're trading with. Why don't you want more regulation on XRP? Why are you in a big fight with SEC's Gary Gensler that's just going on and on?
Well, it is going on. That's frustrating. Gary Gensler was quoted as saying that justice delayed is justice denied, yet at every turn the SEC has been slowing this one down. Look, we were the ones advocating for years that we needed regulatory clarity in the United States. And then for the SEC to say, hey, even though it's not clear, we're going to bring a civil lawsuit saying that XRP is a security, we find to be a bit ironic. I'm actually advocating for regulatory clarity. I've been
not for XRP to be a security.
I think most crypto assets are not securities, and I think they are clearly commodities, and they are regulated. I mean, when people say, as Gary Gensler has said, this is the Wild West, that is not true. We're a regulated company by many different regulatory bodies today. And outside the United States, you have the regulatory clarity. I think the Internet of Value, Ripple talks a lot about what payments look like, not just today, but in 10, 20 years. And when we think about that, we talk about this Internet of Value. How do we let value move the way information moves today? I think about the dynamic between Ripple and Swift, not dissimilar to the dynamic between, when Amazon in 1997, 1998, and you got Walmart. Certainly it's a David and Goliath kind of classic story. I think that the challenge is you're dealing with, when Ripple thinks about the future of the Internet of Value, really democratizing payments, reducing costs dramatically, increasing speed dramatically, we're really thinking about it the same way we introduced new technologies like TCP/IP and HTTP that became the Internet of Information. When we talk about what the SWIFT network is today, it's kind of a closed network. It has a lot of members on it for sure, but AOL had a lot of members. And when we moved into the age of the Internet at a decentralized, democratic network, I think that what you're seeing introduced with blockchain technologies, and by the way, it's not just Ripple. When we think about interoperability, we think about interoperability between many blockchains. And I think that the future we see is certainly one of many networks, interoperable networks, and reducing the friction of those payments to close to zero. And I think you're going to see a lot of innovation spawn from that, part from Ripple and part from an entire ecosystem. So I'll also agree very much with what Godfrey said at the end. Competition has clearly been a good thing for Swift. I think that I do think what has happened at GPI is a big step forward. For 40 plus years, we had a construct around how cross-border correspondent banking worked. It worked, but it had a lot of limitations. We're seeing that move forward. But I think it's a step forward when you're switching from kind of, if I may, horse and buggy to, hey, can we make the horse and buggy go faster? Sure, but if we can actually just move to a Ferrari, let's do that.
So you've said before that you think there's a world where Ripple could take over Swift.
Well, I've also said I thought there was ways we could work with Swift.
Let's talk about that.
Well, I'll start that comment just by saying, look, Swift is owned, I think Godfrey, by the way, has a very challenging job. Swift is owned by the banks. It isn't a traditionally kind of construct. You have a very strong chairman, and in-house Citi kind of is an important stakeholder in that. But at the end of the day, Ripple's trying to help financial institutions and banks be successful in the future. How do we enable Santander to compete more effectively with PayPal, with Amazon, Facebook? And it's not going to be in settlement times measured in days. It's not going to be measured, settlement costs measured in $15+. So I want to see our mission in life really has been, how do we help these financial institutions be successful? Those are the same financial institutions that own SWIFT. And so in many ways, we've thought, hey, we could work together. That hasn't played out. And I think increasingly, we are seeing more and more banks adopt Ripple's technology. And we're seeing that play out. But I have a ton of respect for what SWIFT has built, just to be clear.
Most people recognize that out of all the developments in the blockchain and digital assets ecosystem, DeFi is potentially the most transformative, right? It's also, in some ways, the furthest afield from being able to kind of have widespread adoption. But unlike, in the early days, permission blockchain use case here or crypto here, there's not one institution in finance who doesn't have some path to being disrupted by DeFi, right? So everything else has been a mix of kind of opportunities and maybe threats. DeFi forces everyone to say, what does this mean for us if this actually happens? So everybody's paying attention. You're just not at the point yet where you've got kind of banks and asset managers.
Yeah. I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
What we can do is we can move tokenized deposits around cities, corridors. Right now, it's just US and Singapore with aspirations of adding another 3 to 5 in the next near term. Well, it's great that we have this internal token, but our clients don't want a city token or.
Well, so I would agree with what Katie's describing. I think we kind of have had a big bang moment. Earlier today, Mary Meeker described the iPhone as the big bang moment. I think blockchain broadly is a big bang moment. And I think you do have regulatory bodies trying to figure out, okay, what does that mean? And I agree with Katie that there are some areas where it's very clear. Some in the crypto community, I think, have kind of argued, well, no, they come from very anarchistic, disruptive, down with the man, down with the government. And I think, look, that's, naive in terms of maturing the business to solve real problems for real customers. And so I think that the regulatory engagement is appropriate. I think the questions that are being asked, sometimes it is clear. We need to follow rules around money laundering and what's called KYC or know your customer. And those that are trying to circumvent that, I think that will be short-lived. I think the word blockchain has become catnip for venture investors. Sure. I think the hype in reality.
Penny stock investors, right? Long Island.
Yeah, Long Island IC became added blockchain, and now of course they're delisted, which they should have been. I think the hype is definitely ahead of the reality in lots of ways, but that doesn't mean that there's not real problems being solved at scale.
Right. So again, how do you, if you're sitting on the outside, go, oh, that makes sense, or no?
You asked, I think, the right question. And I think the question I would encourage the investors and even the audience to think about, ask the question, why wouldn't a database work better? There are a lot of examples where I hear, and I'm sure we all hear, a pitch from somebody like, well, blockchain this, blockchain that. And I think, you know what? A database is a very efficient technology, and you should use a database. Now, there are exceptions to that. There are examples where I think blockchain is transformative. As I said earlier, I think it is a big bang moment for a next generation platform of capabilities.
I think one thing, if there is one message that you can get in this room, is Ripple is not an ordinary company. We are not here to make have a small market share or.
Thank you for having me. I think the question you're asking is a really important one. And I think it gets to the kind of core of sometimes just a misunderstanding about how these technologies can be applied in a way that actually is really good for businesses, for citizens, for just the community at large. And so when we talk about like, should we ban something, let's make sure we understand what we're talking about. The way Ripple uses these technologies, as you introduced, is we can make cross-border payments, which are slow and expensive today. We can make them real-time, very efficient, very low cost, and that's good for the global economy. We can unlock trillions of dollars kind of trapped capital to make the economy more efficient. And so blockchain technologies can be applied in a lot of really constructive ways. That's reducing friction, whether that be transaction cost, transaction speed. But again, for Ripple, that's around payments. But, you know, I think to say, hey, let's just ban all this, yes, the toothpaste might already be out, and I don't know how you get it back yet.
How many of you know the difference between payment and settlement? Not too many? So, a couple. All right, so let me just give you just a high level on this. I go to a restaurant and I pay with my Visa card, and they let me go and they don't call the police saying that I left without paying for my food. That's a payment. But I still have to pay my credit card bill, and somebody still has to wire money to the restaurant, right, or ACH or whatever payment system they use. The payment has not been settled. Traditionally, payment and settlement have been completely bifurcated into completely separate systems. SWIFT is a payment system that doesn't do anything with settlement. And the problem with that is it makes it hard to do a good payment because, like, you don't know if the recipient, you can't check the validity of the recipient. You don't know necessarily what the fees are going to be, what the exchange rate's going to be when the payment settles. So we built a system that, and the only reason they've been separated in institutional payments is historic. These systems date back from the old days when people had giant wheels of magnetic tape, and the tape was like on the bank's transaction computer during the day, and someone would physically carry it over to the settlement computer that talked to the other banks at night. And there was no way to settle during the day because the tape had to be on the computer that was handling the bank's transactions. It had to go to the settlement computer when it was done. I'm not joking. I'm serious. If you look at your glitzy like front end application for your bank, and it's all really cool, and you can access it on your phone, and it's all really, you know, it's 21st century, but you scratch just a couple of layers below the surface, and it's like you took a time machine. If you're lucky, you're in the mid to late 70s. Like, that's when these systems that plumb the movement of money were built, and they are breaking down. Make no, even if blockchain completely fails, even if all cryptocurrencies are a bust, the payment world is going to change because it's terrible.
The way we are using XRP is really to solve an institutional liquidity problem. So today, as many of you guys know, well, actually, many of you may not know, but the way banks manage money is they'll pre-fund. And so at the Bank of Chris, you can be the Mexican peso, I'll be the US dollar. The Bank of Brad would pre-fund to the Bank of Chris. I'd put, you know, $20 million there, then over time that would get debited, and then I would re-up. But that means there's dormant capital sitting in almost the engine that is correspondent banking, the engine that is international payments. Any engine needs oil. The oil that exists in international payments is that pre-funding. That pre-funding represents $10 trillion of pre-funded, just kind of dormant capital sitting there to grease that engine. If what Ripple's trying to do is if we can make that 10 billion down to 9 billion down to 5, you've massively made the global economic engine more efficient. You can take that $5 trillion, going from 10 trillion to 5 trillion, and you can reinvest it in all kinds of stuff, whether it's, I mean, you could do dividends, you could do working capital, you can hire more people, you could, you know, fill in blank. That's just good for everybody. By reducing the friction on these kinds of payments, I think you will find that segments of the population that are underbanked or unbanked we can offer products to them. You know, when we talk about the unbanked and underbanked, people often, I think, get confused because the Bank of Chris is a profit-motivated entity. You're a capitalist. You want to, if you could serve a customer,
but a fine bank,
a fine bank, a very reputable bank.
Thank you.
Just don't do a tier 1 capital ratio on him. But sorry, that was a little bank humor. That didn't work. Yeah, sorry. Anyway, the point being, I think we can make the whole industry way more efficient, and Ripple's very focused on that. We're trying to use XRP for that purpose. And I think that broad brush of crypto sometimes, you know, people don't understand the different use cases. Look, I'll tell you one other interesting shout out. Congressman Budd today, the representative from North Carolina, asked a question of Mark Zuckerberg. And the point, his question, the construct was roughly, look, there's digital assets like Bitcoin, Ether, and XRP, and how do you compare that? And, you know, those are digital assets. That's right. And
I think that the regulatory clarity is helpful. And, I think it's good that we need more Congressman Buds educated and educating to have people understand the different use cases and how these should be regulated.
Appearance, but also don't have the names.
Hi, my name is Teresa. And the last 3 months, 4 months, 6 months, I don't know, I studied very hard the digital euro. So it's my special topic. And I'm really interested how the position of the classic banks, such as corporate and saving banks, will develop when the digital euro will be introduced. So I think my personal opinion is that it would be a good opportunity to have new services, innovative services for the customers. But the most banks are really, have much anxiety and do not know how to react to this topic. So I want to ask you, what do you think? Are there more threats or more opportunities for the banks?
Fantastic question. By the way, I think you're doing the right thing by focusing on these issues, and I'm sure you'll find a job is far within the Euro system. Banks are some of the financial intermediaries who will be distributing the digital euro. We at the ECB are not going to open a bank account for the 360 million Europeans. It's not our business. We don't know how to do that. We don't manage relationships. But banks do that. So they really have to embrace that project and see how they can deliver.
It forces everyone, I think, to really focus on, are we solving real problems for customers? Are these technologies being deployed in a way that actually help consumers, help businesses, help citizenry, at the federal level? And I think a lot of what happens here at Davos is talking about government engagement. So I remain very bullish.